Most investors spend their time chasing headlines, the latest AI stock, the next market rally, or whatever big name just made news. But here's the truth. Some of the biggest returns in market history didn't come from well-known giants. They started with tiny, overlooked companies trading under $5. These are the kind of stocks smart investors quietly accumulate while everyone else is distracted. Welcome to Finance Flicks Hub, the place where we break down real investment opportunities with clarity and depth. No hype, no guesswork. Today, we're diving into 7 penny stocks that actually make sense. Not speculative startups or failing shells, but real businesses with profits, growth strategies, and room to run. Let's get started. 1. Gerdau SA. Ticker GGB. Let's kick things off with Gerdau, one of the largest steel producers in the Americas, and a name that often flies under the radar. Unlike most penny stocks that rely on hype, Gerdau has a tangible global operation. The company produces steel for everything from infrastructure and energy to manufacturing and construction. Industries that are seeing renewed demand worldwide. What makes Gerdau stand out right now is its growing exposure to the US market, which now accounts for more than 60% of its EBITDA. That's a big deal, because the US protects its steel industry under Section 232 tariffs, giving Gerdau a built-in competitive advantage against cheaper imports. The company is also expanding aggressively, investing 1.6 billion Brazilian reals to boost flat steel production, the type used in auto and construction sectors. Financially, it's solid. Earnings grew 14% quarter over quarter, debt remains manageable, and it just earned a credit rating upgrade from S&P. While it's cyclical and not flashy, Gerdau is a real, profitable business with global demand behind it. And that makes it one of the more credible penny stock plays out there. Companhia Energética de Minas Gerais, ticker CEG. Next up, we have CEMIG, one of Brazil's largest electric utilities, and a company transforming itself into a renewable energy powerhouse. Most people think utilities are boring, but that's the beauty of this one. CEMIG is modernizing at full speed, with a $7.4 billion investment plan running through 2029. That capital is going into grid upgrades, new renewable projects, and digital technologies that make energy delivery smarter and more efficient. It already operates a massive network of hydroelectric power plants, giving it a clean, reliable base of generation. Now it's branching into solar, digital meters, and automation, bringing Brazil's energy sector into the modern age. Recent earnings have been strong, beating expectations on both revenue and profit. And even with regulatory challenges ahead, its long-term growth potential looks solid. In short, CEMIG offers a rare combination. It's a penny stock that behaves like a dividend-paying utility, with the growth story of a renewable energy company. Wipro Limited, ticker WIT. Our third stock, Wipro, is a global IT and consulting giant based in India, but it's quietly gaining traction in high-growth markets like AI and cybersecurity. Wipro has spent the last year restructuring under CEO Srinivas Pallia, cutting underperforming divisions and investing in next-gen services. One of its boldest moves was partnering with CrowdStrike, one of the top names in cybersecurity, to develop AI-powered threat detection tools. Wipro also launched its Telco 360 initiative, helping telecom companies modernize their networks using automation and cloud infrastructure. Financially, it's stable and growing. Last year, net income rose 10.9%, free cash flow expanded, and new deal wins pushed total contract value to $5 billion. Trading under $5, Wipro gives investors exposure to the global tech transformation at a fraction of the cost of US tech stocks. It's not a quick trade, it's a long-term compounder. 4. Lloyds Banking Group, ticker LYG. Moving to the UK, let's talk about Lloyds Banking Group, one of Europe's oldest and strongest financial institutions. This is a stock that consistently delivers. Lloyds grew its pre-tax profit by 5%, raised net income by 6%, and posted a return on equity of 15.5%, metrics that many US banks would envy. But what makes Lloyds especially interesting is its digital pivot. It's investing $4 billion into a modernization project called Athena, which uses AI to improve credit analysis, automate lending, and streamline customer service. On the shareholder side, Lloyds raised its dividend 15% and continues to buy back its own shares, a clear sign of confidence in future earnings. Yes, there's still some noise around ongoing litigation tied to past auto finance practices. But that's winding down. The fundamentals are rock solid. For investors looking for a stable, in financial stock under $5, Lloyds stands out as a rare combination of profitability, modernization, and value. 5. Banco Bradesco S.A., ticker BBD. Next, we head back to Brazil, to Banco Bradesco, one of the country's biggest banks and a financial heavyweight in Latin America. Bradesco isn't just surviving Brazil's challenging economy, it's adapting fast. The bank holds over 2 trillion in assets, operates across multiple financial sectors, and maintains one of the most advanced digital banking platforms in the region. It's currently trading at a PE of just 9.4, well below global peers, and analysts are starting to take notice. Recent upgrades highlight improving credit conditions and the bank's expansion into new areas like healthcare, where Bradesco is partnering with hospital networks to offer integrated services. Yes, consumer debt remains high, and growth is gradual, but Bradesco is a cash-generating machine with deep roots and a growing digital footprint. If you're looking for an emerging market financial stock with real stability, Bradesco deserves a spot on your watch list. 6. Ambev S.A., ticker ABEV. Let's shift gears to something more familiar: beer. Ambev is the Latin American beverage giant behind brands like Skol, Brahma, and Antarctica, and it's showing that a classic business can still deliver innovation and growth. In the latest quarter, Ambev grew net income by 15%, boosted by efficiency improvements and strong demand in its premium segment. Premium beverages now make up more than 22% of total sales, helping expand margins and brand recognition. But Ambev isn't just about drinks. It's investing heavily in renewable energy, cutting costs, and making operations more sustainable, all while maintaining one of the strongest balance sheets in the industry. With a 48% gross margin and consistent cash flow, Ambev offers stability, a steady dividend, and exposure to one of the fastest-growing consumer markets in the world. For investors seeking reliable income with long-term upside, Ambev is a smart and steady pick. 7. Nokia OIJ, ticker NOK. And finally, let's talk about a familiar name with a brand new story: Nokia. Once famous for its brick phones, Nokia has completely reinvented itself. Today, it's a global leader in 5G networks, defense communication systems, and AI-driven telecom solutions. Recently, Nokia opened a new AI RAN lab in Dallas, a cutting-edge research hub focused on improving 5G efficiency using artificial intelligence. It's also deepening partnerships with T-Mobile and Deutsche Telekom to build faster, more reliable networks across North America and Europe. On top of that, Nokia recently delivered the world's first 1900 MHz 5G railway network, proving its expertise in mission-critical communications, a key growth segment in defense and transportation. While revenue dipped slightly due to one-off factors, core operations are healthy, and the company continues to buy back shares while paying a steady dividend. With telecom infrastructure demand expected to surge again in 2025 and beyond, Nokia could quietly become one of the most profitable turnaround stories in tech. Now, let's take a step back and connect the dots. Across these 7 companies, you're not just looking at random penny stocks. You're seeing a diversified portfolio that touches nearly every major global theme: infrastructure and construction, Gerdau, clean energy and utilities, CMIG AI and cybersecurity, Wipro digital banking and finance, Lloyds and Bradesco consumer growth and sustainability, Ambev 5G and communication technology, Nokia. These businesses operate in completely different sectors, but share one thing in common: they're real companies trading at discounted prices. That's what makes this list powerful. It's not speculation, it's value hiding in plain sight. So, what's the takeaway? Every investor dreams of finding that hidden gem, the company no one's paying attention to until it suddenly breaks out. But spotting those early doesn't take luck, It takes patience, research, and a willingness to look beyond the obvious. Each of these 7 stocks, from Nokia's 5G expansion to Gerdau's industrial strength, represents a real business with potential that far outweighs its price tag. Just remember, penny stocks are volatile, so always diversify, manage risk, and think long-term. That's how real investors build wealth, not overnight, but over time. Outro, channel close. Thanks for watching today's episode of Finance Flicks Hub. If you found this breakdown helpful, make sure you subscribe and turn on notifications. We post new, research-based investing videos every week. Stay smart, stay curious, and as always, keep looking for value where others aren't. This is Finance Flicks Hub, and we'll see you in the next one.